Hey guys, welcome to Business Hub channel. Before I discuss this video content, I would like to ask you to subscribe my channel so that you will receive my new videos coming out every week, and also remember to like and share my videos to your friends and families. Alright guys, let's watch this video. In this video I will guide you how to obtain a business loan. Almost every new firm starts with this obstacle. You have a wonderful concept and the abilities necessary to make your new business endeavor a success, but you lack cash. When the money you have available to start a company is insufficient, you may want to explore a business loan or line of credit to make up the difference. Obtaining a startup loan is often difficult, since a brand new firm lacks a credit history as well as a sales or operational history to indicate a low credit risk. Still, it is feasible to get a loan to support a new firm, and the loan application process may be illuminating for aspiring business owners. If you are interested in obtaining a loan to launch a company, you may start by gaining an overview of this procedure. How to obtain an enterprise loan. There are 3 basic stages to obtaining a loan for a small business. 1. Create a financial and business strategy. 2. Check your personal and business credit. 3. Find lenders and submit an application. Developing a business plan and outlining your company's finances is an essential step. Your plans and expenditure sheet demonstrate lenders how your company will grow, what you need to get started, where your capital will come from, what you can anticipate in sales and costs, the expertise and talents that will move your firm ahead, and what success over the following 5 years will look like. Because your firm lacks a track record, these strategies assist lenders in assessing its risk. Frequently, startup capital originates from numerous sources. For instance, if you need $100,000 to establish your firm, you may use $25,000 from your own assets, $25,000 from friends and relatives willing to invest, or via a crowdfunding campaign, and $50,000 from a lender. The credit score is another important statistic. Businesses have their own credit ratings, which evaluate creditworthiness based on prior conduct, such as the presence of collections, liens, judgments, or bankruptcies. A strong company credit score may open doors and assist established firms in securing favorable lending rates and conditions. However, your firm may not even have a business credit score just yet. If this is the case, creditors will consider your credit score and report. Although restrictions vary, a strong credit score is often required to get a company beginning loan. Given that startups are inherently risky, your personal credit serves as a counterpoint. Once your finances are in order, and you are aware of your credit standing, you are ready to search for a lender, or more precisely, many. Finding the appropriate finance for your new company may need a few door-to-door solicitations. There are several things to consider and helpful resources available. Where to obtain an enterprise loan. Banks, credit unions, internet lenders, and even micro-lenders who specialize in smaller loans provide business loans. Nonetheless, not every possible lender will be suitable for your starting firm. In fact, many lenders want applicants to have been in company for at least a year or two prior to loan consideration. It is also preferable to get many loan offers, if feasible, so you should likely cast a broad net. The more possible lenders you locate, the greater your likelihood of obtaining a loan that meets your requirements. Where does one begin? Here are some suggestions. Your bank or credit union. Inquire with your financial institution about business loans and credit if you have created a business bank account. Even if your new company does not qualify for the entire loan amount you're requesting from your bank, a modest loan or line of credit may be able to assist. It will develop a credit connection for the future, which will help you grow your business's credit score over time. Oriented banks, you may find business in your town or online. Internet lenders, startups may find more receptive to loan than traditional banks, while interest rates tend to be high. Micro lenders, if you require less than $50,000 to establish your firm, you may want to investigate micro lenders such as Kiva or Opportunity Fund. These are nonprofit organizations or alternative lenders that assist companies in obtaining modest loans, sometimes at low interest rates. Many are entrepreneurial friendly. Small Business Administration may be a useful resource while seeking for financing. The SBA does not offer loans directly, but it guarantees loans made by banks and credit unions to small businesses. An SBA guarantee mitigates a portion of the risk associated with company funding, thus working with the SBA may be quite advantageous for new business owners. The SBA's Lender Match program may help you find a lender, and its SCORE program can link you with experienced company owners who can provide helpful assistance. SBA loans include a number of criteria, and the application and financing procedure may be time-consuming. What do lenders consider when evaluating applications for business loans? In general, a lender evaluates your firm's financials and credit history to determine if you qualify for a business loan. However, when requesting for a loan as a startup, your firm finances and credit score are likely insufficient to qualify you. Even for well-established companies, personal credit ratings and histories often play a role in acquiring corporate finance. The 2020 Small Business Credit Survey, conducted by the Federal Reserve, indicated that 88% of small firms that got funding utilized the owner's personal credit score to do so. Be prepared to offer your personal credit information in addition to your company credit history and score if you want to apply for startup finance. Additionally, you may want to evaluate what collateral you may use to acquire a loan and increase your likelihood of acceptance. 59% of established small businesses that got financing in 2019 secured their firm debt using personal guarantees, according to a Fed study. If you have company assets, such as equipment or accounts receivable, you may be able to utilize them as collateral. Are you apprehensive that your credit and/or assets will not be sufficient? A consignor who pledges personal assets and credit history may be advantageous. Even if your company has yet to generate a profit, your business strategy and financials serve to complete the picture. By displaying predicted income, costs, cash flow, and debt, you may establish the business's viability. In addition, your industry knowledge and expertise demonstrate your capacity to lead your organization to success. Additional options for business funding. If a conventional business loan is not a possibility for you and your company, alternative finance may be able to assist you get your firm off the ground. Self-funding is the most popular option in this context. You may be able to bootstrap your way to loan eligibility in a few years, or avoid the need for a loan entirely by utilizing your savings or assets. Be careful not to deplete your retirement savings and emergency fund, since doing so might leave you destitute if your company endeavor fails. Here are a few alternatives to standard loans that you may consider for funding your startup. Friends and family, if those closest to you are willing and able to lend or invest, you may launch your firm without a lengthy track record or a high business credit score. Before committing to this choice, you should be aware that defaulting on a loan from a loved one might have severe effects on your relationship with them. Get your agreement in writing and fulfill your obligations. Venture capital. Obtaining an early investment from a venture capital company or angel investor has its own unique obstacles and opportunities. Investors in venture capital often want an ownership, investment, and a continuing engagement in your firm. They prefer enterprises with strong growth potential and rapid expansion. Positively, venture capital investment is not debt. You deal with investors, not lenders. Crowdfunding. Your invention or new company might be conceived on Kickstarter or one of the many other crowdfunding sites. Visit each potential website to see which offers are effective and how they are organized. Pay particular attention to terms. Understand what will occur if your transaction falls through. Vendor funding. If you can convince a vendor of the virtues of your firm, they may be prepared to cooperate with you on financing by granting credit, a loan, or an investment in your business. If you are cash-strapped, this may be a practical approach to finance equipment or generate inventory. Personal loans or credit. If everything else fails and you need an extra loan or credit, you may want to explore utilizing a personal loan or even your personal credit cards to support your new business. When using personal credit to establish a new company, you should be mindful of the risk you assume. If you incur a substantial amount of personal debt and your firm collapses, you may be in serious financial danger. If you use your house or other assets as collateral for a loan, you risk losing both. Before making this step, you should have confidence in yourself, but you should also be skeptical. From startup to savvy enterprise. Your new firm may need finance, but that is not all it requires to develop and grow. The process of creating a business plan, finding out lenders, and securing the necessary funding to make your company a reality may make you a better business person, which is a permanent advantage for you and your business. Once you have obtained the finances necessary to launch your firm, you should do all possible to establish and preserve your business credit as you go. Examine your business's credit score and discover more about the elements that affect it. Therefore, you will be that many steps ahead the next time you require a business loan. Well, guys, my video has come to an end, and I hope you enjoyed it. Thank you for watching my video, and remember to like, comment, share and subscribe our channel so that our channel can grow and bring everyone new videos with new things to learn. Bye bye for now and see you in my next videos.